Hey guys, it's Max. How's everybody doing? All right, let's check this stuff out real quick. This is Alti. I get all of these confused. Anyway, okay, this is Alti. Alti's down about half a point. The average stock is up a little bit, but Elf Beauty is ugly this morning. Hims is having a usual, good performance in the morning. LFGY is murdering it today. Look at this, up 2.4, beating the average constituent. What in the heck? Are you freaking serious? I love it. All right, we'll take it. Only one that's down is this one, whatever that is, APLD. I looked it up the other day. I know what it's not because I called it the wrong name the other day, but I don't remember what it is. All right, so I'll check that and get back with you. Now, here's GPTY. This one is kind of my favorite because it has a hedge, but it's going to need a hedge this morning because some stocks like Amazon and Apple are pulling back today. All right, well, let's look at the index buffer report. See what else is going on. Now, first day to the chart, SDTY. Welcome to the buffer report, SDTY. Of course, it is leading all of the SPY funds on the way down. Well, it's not down as much as SVOL and ZVOL. I'll take that back. Vol just recently popped in the past hour and a half, and that's making SVOL and ZVOL turn around. The best looking ones are Feed and 5E. That's awesome. 5E's up 0.75 of a point. That's wonderful. Feed's doing well. Remember, and all of these pay a nice dividend as well, or a yield, whatever you want to call it. All right, then, like I say, ZVOL and SVOL are down the most, and that's because they are most sensitive to volatility popping. Let's look at the market. All right. It looks like the market for now is rejecting out of this bearish gap again. For whatever reason, there's been sellers waiting out of the woodwork to sell whenever we get here lately. So we took them up on the opportunity yesterday afternoon at the close because I was afraid this might happen. I'm targeting this area right here, which is, there's a gigantic open gap that the SPY left behind. I mean, I didn't even draw it big enough. It's bigger than that. It's gigantic. Between 582, 586, 587. Anyway, I had content and I showed a trade that will monetize if we go there by next Friday. So I'm not predicting it or anything, but anyway, if you guys are interested, look at that kind of stuff. Look at that video was out. I put it out like 7:30 this morning. Here's what ZVOL and SVOL are reacting bad to. This is volatility. When volatility goes up, it's bad for the market. So this is, it's inverse. So when things are going up, it generally is bad. So I'll put the market on the screen down at the bottom, and you can even see as volatility's gone up this morning, this is the SPY down here. The SPY has sold off, and the selling off has picked up. But on days when volatility is kind of trending down, is at least under the 200-day moving average. At least under the 200-day moving average, or a 200-period moving average, the market tends to drift up. And that was Wednesday. It blew up. And Thursday, it kind of stalled out, went sideways, but right into the close, it blew up. I thought that might be a bear trap. So we'll keep an eye on this, but this is you can see other times where it's below the 200-day. Those were decent days to be long or whatever. When it's below it for extended periods, right here, 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 here. Those are good days where you can sell puts generally. we watch this stuff like a hawk. If you want to join our Discord, and we'd like to meet you. Come introduce yourselves. All right. So what else should we look at? Qs are pulling back too. It's kind of the same old story. The Qs also have, if you're a Q player, you could maybe either aim there for next week at the 511 area, or aim at the 495 area, maybe for the week after next, or maybe for next week if you're bearish. But I use these gaps and these prior areas of support or resistance as targets for the option trades. I'm not always right, but it's just kind of a good kind of place to start on what to start with. You can adjust from there. Look at this. The only thing that's really killing it today is this one, Planeteer. This thing is just, this thing's amazing. Amazing. I wonder if Feed and 5E have put this in yet. And if not, I wonder how long before they add this. Feed and 5E are momentum based, and let's get out a daily chart and that's a daily chart. I don't even know if that's factored in dividends. It probably is. No, that's not. Data's not adjusted for dividends. This is just the NAV of the darn fund. Of Planeteer. That's amazing. Now let's check out PLTY. That's amazing. And that's not even dividends. That's just, I believe that's just NAV. I want to check again because there's no way. Nope, that's not even dividends added in. If we add in dividends, it's not that much difference because it's only been out a couple of months. But, but it basically from 50 to 87, if you add in dividends, is just the NAV. If we adjust the data for dividends, I just saw it adjust. It adjusts the lower price is what it does. It makes the opening price less. I see it. Okay, so if we adjust the data for dividends, yeah, we're still at 88.11, but our central opening price is $42 instead of 50. So we've doubled with dividends factored in. Without dividends factored in, we're only up 30-40%. So I just wonder how long before this is in Feed and 5E, or if it isn't already. I'll look as soon as I get out of here. Maybe it'll be in at the end of the month, or maybe it'll be in at the end of next month, if it isn't already. All right, well, that is just a face ripper, though. That's an incredible yield fund. So here's the deal. It has nothing to do with the yield fund. They all do the same thing. PLTY is the same stock as MRNY. For all intents and purposes. These are just prospectuses with strategies that they file at the SEC, and they just do a mechanical strategy day after day. It just happens that the underlying is doing better. So just think of these as a different way to get long the underlying. These gaps, boy, people, open gaps, I don't know if people realize how bullish they can be, especially when they aren't filled. Like I said, there was people that wanted to get in right here, but it didn't trade overnight, or it didn't trade very much because, not everyone can trade after hours. So the next morning when it opened regular hours, it was, dollars ahead of where it was the night before. And there's people that were trying to buy this. And a lot of them just moved their price up and chased the market, and they've been chasing it all the way up. But, when these happen, and especially if it goes a full day or two and it doesn't fill you could just huge upwards pressure on the market. You can assume some of these people are chasing the market up. That's why I always put them on the chart. The opposite can happen too. These can go, they can not even make it till the end of the day, and the price can already be going back through it. Well, that means it was a false signal, and it's actually probably resistance. Yeah, but if gigantic open gap is still there by the end of the day. And by the end of the second day, and sure enough, and then look at this. So now we have this to deal with. Just as far as, order flow, just looking at the flow of the orders, there's more buyers that were left behind here. And this has been 1, 2, 3, 4 days, and it's still open. It did kind of back up into there a little bit, and I mean, buyers ran it out. So, but yeah, that's an amazing stock. But the broader market, though, the broader market to me looks like kind of like it faltered right here. But as soon we'll break this trend line, we'll go down here maybe to this one and break it, or maybe to this one and break it, or maybe we won't even get here. Who knows? But I'll feel better whenever we take out this trend line and stay above it. All right, guys, I think that's all I have to talk about today. We talk about everything. Do we talk about this YieldMax buffer? It's ugly to be an AMZ or it's ugly if you're an AMZ or GUI. AMD, freaking AMD. All right, guys, have a good one.